What's going on, guys? Gabe with Review Dork, and this is a day trading video. And I heard you want to make some money, want to make some real money. You've come to the right place. This is the right channel. We go ahead and we simplify day trading so it's not intimidating to you. And ideally, we want you to turn a profit. Now, what I want to talk about is market psychology. And guys, we're going to use AMC as an example. By no means am I saying day trade, swing trade, momentum trade, AMC, but AMC is operating in textbook fashion. So here in the US, we drive on the right side of the road. Applejacks, what happens when you don't drive on the right side of the road?
You're probably going to die.
Yeah. And then people are at your funeral like, why was he driving on the left side? That doesn't make sense. You don't want to go against the trend. Just recently, I got a message. Hey Gabe, how come whenever I buy, it's always red? You bought and now you're red because you did not plan your trade on every chart. I don't care if it's the minute. I don't care if it's the 4 hour or the daily. When you are entering a trade, you want to make sure that your data is plotted out. What do I have here? I have a couple of things. I have the 50-day moving average. I have the 200-day moving average. I have the volume weighted adjusted price. I also have my support and resistance for the day. So currently 43.39 is resistance. Now I want to show you guys what happened here. And the reason why you're red is because you're not paying attention to your support and resistance, and it happens in different segments, right? The first segment, there's something we want to look at, is the 50-day moving average. What is the price action like on the 50-day moving average? Well, the price action showing us consolidation. This is a key point. This is a point where you jot down and you say, I might want to enter. You enter a trade. Where do you want to exit? Well, between the 50-day moving average and the 200-day moving average is at or about a 32-cent difference. Now, if this was any other equity, I would say, why the hell not? Go for that trade. Make your 30 cents on the dollar. Buy 1,000 shares to make about, what, 300 bucks on that 32-cent difference. That would be your first exit point. Your 200-day moving average is now acting as your resistance. Now, you want to hypothesize. Is it going to break it or is it going to respect it? Now, this is where things get interesting because we also see the VWAP or the volume weighted average price is just above the 200-day moving average. If we break above the 200-day moving average, we exit a quarter to half our position. Then we have 3/4 to half of our position still in the play, as long as it's respecting the 200-day moving average, still in play to see if it hits VWAP. Okay, we broke through VWAP. Now what it's doing, it's found its channel on the VWAP. The next question is it going to break through? You can exit and take your profits and then re-establish another trade thesis where now you're saying, okay, if the price action dips below and goes down to the 200-day moving average, I am now going to enter and see if it respects the 200-day moving average as support and then respects the VWAP as resistance. If it breaks through the VWAP, again, we take out half of our play and then we see if it runs to 43.39, which is a significant plotted line here because we can see through data it has acted as resistance. Now, once it breaks that, then we have other points to plot our support and resistance. But guys, it is super important that you know this and you play these lines, because if you play this and you enter at VWAP because you see it running green and then it retraces back down to the 50-day moving average, you're like, oh fuck, I just entered, why is it red? And because you don't have an understanding of what it's doing and you don't have an understanding of what the market is doing, you're probably gonna go ahead and exit your position at a loss. And I tell you what, on this channel, we take no losses unless it is our stop loss. And guys, you should be able to know where your stop losses are based on these lines. It's really that simple. It is not very complicated. The masses operate using these moving averages and plotting trend lines and plotting support and resistance. You need to do the same because you need to think like them. Otherwise, you're going to be on the other side of the road. Rest in peace, your portfolio, because you're going to blow it up. And you know what we're all going to say? That idiot, why wasn't he on the right side of the road? This is Gabe. I'm signing out. Peace.